I'm just cleaning off my little, I was sitting here listening to Not Legal Advice video that I guess was on a space call. It was on Twitter, I think, not on YouTube, but I don't fully, I'm not very technically literate. And I started to take notes, but I didn't take a lot of notes of his video. So I'm just going to give you my reactions, kind of free form. Sorry, I should have set up before I came on, but it's early. I was going to be traveling today, and it doesn't look like I will be today. Hopefully tomorrow. I had 2 appointments later this evening, late afternoon and evening in Denver, but the flights that I could arrange were all sold out, at least in any class of ticket that I wanted to buy. So I guess I'll try to do it tomorrow. So 2 things. I may not be available to come live tomorrow, early anyway, regarding Railtown. And I thought maybe I'm looking for a notebook so I can make notes as I'm talking to you. Here we go. I got it. I didn't update the Railtown number, but then again, I don't think it was a massive amount. Well, it's probably a few thousand more. We might be, sorry about that. On our Railtown, we're at 11,340. I bet we're now at 11,350. It wasn't much higher from yesterday. So anyway, all right, I'm ready to go. Good morning, everybody. My first reactions I listened to Richard's hour-long video. My first reactions, 3,000 of you have watched it, which means to me there's a lot of pain out there, a lot of money lost. Yeah, I guess I should tell you, I own 11,000 shares of GTII. That's the dividend. So that means that my initial position in GTII was 110,000 shares. And I averaged up. So I don't remember the exact high for my position, but it was over 150,000. And I think it did not approach 200,000. It might have been, it doesn't matter, I know, but it was probably close to 200,000 at its peak. I'm doing that by memory. I'm not trying to exaggerate, but I do have 11,000 shares now. So I started with 110,000. I sold a little bit of GTII to buy a little, depending, everything's relative, right? But compared to the position I had, to buy CRTD and to buy MMTLP. And then ultimately, as is my training, I talked to you guys 2 Augusts ago, 3 Augusts ago, because we're in August now. So it's 3 Augusts ago. I was informally, I was asked if I would be CEO of GTII, and I said, I listened for a bit, and I said, okay, sure. And I put a lot of thought into what I would do as CEO, and I shared some of those thoughts. And it's interesting, some of it's not rocket science if you're trying to look out for shareholders and you make shareholders your priority. I've heard some of it come back to me in ideas in other situations from the sort of from the same people I talk to. So, maybe that had a good impact. I don't know. But at that time, I started, I thought pretty clearly indicating to you all that my position on owning GTII had sharply softened. I started warning you of palace intrigue. I knew, and I said it. Well, I'm not sure if I was able to say it. So much information is, you're not supposed to talk about it. But you guys had an advocate, in my judgment anyway, of a gentleman who worked informally, I think, to push recommendations, which, in fairness, quite a few of them were also presented by him to, I guess, this gentleman, then the company. Because I don't know that Ham spoke directly to the company. That part of it I was out of, so it's a little bit vague. And I can't really understand the background there. But what I started telling you all, what's that from? I wonder, you all, that's from A Fish Called Wanda, I think, when he says you all, I can't quite remember the scene. But anyway, I started really, what I did talk about is I thought there was palace intrigue. There was a lot of C-level back and forth. And at the time, there was pending still the law firm acquisition and Trento Mining. And I spent time meeting those guys. I never met the law firm. So I couldn't know that there wouldn't be a positive result from the law firm or from Trento Mines at that time. And so I couldn't absolutely tell you that the stock was going to be crushed to essentially worthless. On the other hand, I think I was pretty strong with it. Now, Cindy Lou Who gets mad at me, and I don't mean to pick on her, but I think she's representative of emotional thinking. And that's where the criminals want us, emotional, angry at each other. And by the way, I'm not always my own best friend in terms of how I react to things. So I'm not saying I'm perfect by any means. Cheers. But I do think GTII, because of the dividend primarily, was in the middle of a squeeze, along with Finger, because many of you bought the stock in that October gosh, I think it's almost 3 years ago, really rallied and then into Thanksgiving. And I think it caught the system. That's the one unpredictable thing that they can't protect against is retail buying and driving a stock price up. And I think it got them into trouble. Now they hired a guy named Frank Benedetto. I believe that. Well, I know they hired him because he put it on his I don't know what his profile, wherever it was, for a company that ended up being called COSM. COSM. He was hired as an IR guy. I assume he got cash and shares, whatever. I'm not against that, by the way, but it's what you do with it. And then they probably hired Lou Bravo. And that's where Cindy gets mad at me and says, oh, you're blaming a dead man. My point isn't that they hired these specific people. They were going to do something. Whether it was that, it would have been something else. Look at GME, look at AMC. They always have something up their sleeve. They also hired the CEO, whether he knew it or not. He was part of their game of COSM. So I don't want to make this video. I've talked about it before, but they got everybody here. Those three guys got everybody here in different levels of involvement. They got everybody here as GTI was squeezing, I think. If in fact anything will ever squeeze, they got everybody to sell GTII and Finger and go over to COSM based on some lies. They said, or they just don't know what they're talking about. I guess that's possible. I would argue Frank Benedetto doesn't always know what he's talking about. So it could be that he's innocent. Lou, I think, looked out for everybody. I liked Lou, and I think he was trying to educate you guys on how to trade, and so it may have just been innocence, gullible innocence, but I think the CEO of COSM knew exactly what he was doing because he took 33 million out of the market as everybody moved from GTII when it was, I don't know, $6. It had been $9 and it came back, I forget exactly, and moved over to COSM based on the idea that because COSM was changing its name, it was going to squeeze. Because it was changing its CUSIP number, it was going to squeeze. Because it had over 2,000% short, it was going to squeeze. Because the CEO was talking to Lou and others, it was going to squeeze. The CEO made assurances he wasn't going to do a reverse split, and he then did sort of the mother of all reverse splits, and the CEO wasn't going to do a deal. Well, I don't want to get buried in all that, but in fact, that was a bait and switch, and COSM, which was a complete crap company, was able to take 35 million out of the market because they convinced retail in the clearly inflated prices of GTII, unless it's squeezed. It could get more inflated. They took that money, and the beneficiary was this crappy company, COSM, and anybody that traded. And they popped the squeeze, I think, that was going on in GTII. It's an unprovable thing. So GTI went, I think it went 897 or something was its high. And I think when Lou and Frank came to tell you to buy COSM breathlessly, they were either as naive and hapless as could be, or they probably might have, kind of, could have known. I don't know. But anyway, the stock from around $6 collapsed to, I don't know, in the twos, 2.5, something like that. And that's when I started, to my memory, that's when I started, I thought, giving a pretty clear backtrack, hey, a little bit lukewarm here. And then the stock just kept going down. And I didn't sell. I thought I needed to, I'm doing all this by memory. I'd have to pull out my statements. But I didn't sell. I was trying to let you guys know what I would do first, what if I were in your shoes, what I would do. And over that next 6 months to 9 months, my main strategy was, why don't you sell it for tax losses and then buy it back in 31 days. And I did a lot of talking about, and this isn't about me. I want to talk about Richard Hoffman's recent video, but I just want to say that my instincts, and again, it's not about me, it's just somebody observing could see this. If you can divorce yourself from emotions and from losses, you see it happening. Ultimately, I made the mistake of giving as the alternative stock Logic, LGIQ, I think, LGIQ, which was a complete disaster. And that's what I did with my shares of, I'm telling you why I now only have 11,000. I sold the majority of my GTII in the teens. Like I think it was 14 cents to 18 cents, 19 cents. That's to my memory again. And I bought Logic at, I think I purchased Logic at up to 40 cents, but then I averaged down as Logic came down. I averaged into Logic in the 20-cent range and down in the teens. And then I bought a bunch of it, really inexpensively. So I don't know what my average in Logic is, but it's all a loss. So anyway, that's the background of why my position is 11,000 now instead of, I don't know. The number that's sticking in my head is I had 165,000 of GTII, but it might have been higher. Anyway, let's move on to my reaction to Richard's video. Number one, I want to say that here, Richard really reacted to me about 9 months ago quite aggressively and negatively when I questioned what the hell was the receiver doing. And Richard came on here both, and I'm not trying to pick a fight with him, I'm just establishing what happened, much like an attorney would, put it in evidence. But he came on here and he really jumped down my throat saying the receiver deserves to get paid what he's paying because he's doing it without risk, or he's taking risk. And I think I tried to be polite. I said, what are you going on about? And then I had Richard on here live, and I think it was 40 minutes, and it was tense at points because he was defending the receiver. And to my eyes, it was obvious that something was going on with the receiver. And well, anyway, that was, I don't know, when it was 9 months ago, a year ago, I can't remember. You guys might remember. So my point isn't to be negative against Richard. My point is those 2 times he was so, I think, angry with me and out of character with me. You know what it is? It's when people in their gut hear what you're saying, but they don't want to accept it, they get angry. They get defensive. And I'm not saying, I don't know what was going through his mind. I can only talk about myself. The reason I bring those 2 times up is I stopped trusting Richard. I just said, what the hell? Is that guy working with why can't he see this? So after watching that long video for me this morning, I have to say that I think Richard is on the side of shareholders and is fighting for transparency and is fighting to find out what went wrong. And he certainly is, I don't know what word to use, fair-minded or open-minded or there's got to be a better terminology. He's looking at all angles and processing what the receiver and the attorneys are doing. And he's coming to obvious conclusions. And to Richard's credit, to his credit, he is going where his observations are, and he's standing there truthfully. And I would submit, even though I don't know her, but her courage and the enormous amount of stress and pain she went through and still went forward. I think his mother would be very proud of him for that. So I guess what I want to say is my reaction to the video is that I was wrong to distrust Richard. In all likelihood, I was wrong. I still don't know why he got so upset at my observations. The other thing, I've dealt with attorneys quite a bit. Unfortunately, it's the most unpleasant thing to deal with when you're a businessman, if you can call me a businessman, and then you deal with the legal world. Legal minds think completely different than business minds. It's just a whole different Ken. It's not bad, it's just different. And it's like going to Paris and trying to, order something. It's like Steve Martin said, let me give you a warning. If you go to France, over there, hat is chapeau, egg is œuf. It's like those French have a different word for everything. And that's kind of what happens. It's a different outlook. And it's just, attorneys have spent at least 4 years, if not 10 years or 15 years, learning a whole different language, a whole different outlook. And business guys and salesmen, I don't think their initial training is as extensive, but their school of hard knocks training is very extensive, and so it's just a different language, and maybe that's where we misunderstood each other. But bottom line, I was impressed this morning that Richard very clearly is coming out not only in defense of you, but he's coming out, he specifically stated in defense of shareholders. And I think that's something that, you know, with all respect to Richard, he's a real estate attorney. He's not a securities attorney. And that doesn't mean he doesn't understand securities. Look, I'm in securities and it's all crap. It's all useless stuff to know. I'm not saying that it takes a genius to go around a golf course and say, hey, I work for Morgan Stanley. Why don't you come meet us sometime and we'll manage your money? These are not brains. These are salesmen and saleswomen. But having said that, my observations early on, as Richard so painfully points out how old we are, he uses the term spidey sense, which I don't think has any meaning in younger generations. But my instincts were on high alert, and Richard really took the opposite side of that early on. So I guess that's all I want to say. I spent a long time distrusting, because I don't trust anybody in this space. I trust myself, except when I get confused. But you don't know me, so why would you trust me? And there's probably about a handful of people I trust. There was one guy I trusted extremely loyally, and he just basically dismissed me. And it's been uncomfortable, it's been embarrassing, but it's given me a lot of time to think. And I have a pretty clear idea of what the system does, the criminals do. And all of those guys, to go back to Cindy Lou Who's point, she says you're blaming it on a dead man. Okay, he is dead. But there's other living people too doing the same thing. It's either they don't know what they're doing or they do. But it's almost, that distinction is almost irrelevant. Their actions are part of the overall sting operation, whether or not they know it. They could be duped. So we don't have to focus on tearing down people, although I find when telling stories and explaining ideas, people understand it better if you use specific names and specific situations. But we don't have to get lost in that. But this whole scheme involves everyone. And for Richard to slowly but surely start seeing it is to his credit. But Richard has a great disadvantage, in my judgment. He would probably say I have a great disadvantage in his judgment. Again, he's an attorney. I'm just a, unskilled Wall Street guy. And there's hundreds of thousands of Wall Street people. Of course, there's millions of attorneys, but we're just from a different school of thought, training, experience. But Richard needs to see things in evidence. And his skill is how to get things into evidence. His skill is how to write out letters and emails. But even in this, it's funny, even in this video, he reads his own email, which was well written, I thought. And then he says, in plain English, I was saying, what the F are you doing? And I'm like, well, why didn't you write it in plain English? Why do attorneys have to write everything in this very careful, you know, it's going to be read by a judge, and it's going to be entered into evidence prose, and then they have to say what it means in plain English. That's the whole issue. And that's probably why he would get it frustrated with me, because I don't talk that way. I don't put it in legalese, and my analysis is not in all that sophisticated legal malarkey, as Joe Biden would call it. But he needs to see things in evidence. To Richard's credit, he told me early on that circumstantial evidence is evidence. And circumstantial evidence is what your eyes see, what your gut tells you. That's my interpretation. And so, anyway, I give him credit for his video. Whenever it came out, somebody sent it to me this morning, and I said, oh God, do I have to listen? But I did listen. So anyway, that's a long introduction. What's my reaction? One of my reactions is that it confirms to me that once a financial proposition becomes a legal proposition, you're not talking about making money anymore. You're just talking about the slow grind of which perhaps has some benefit, by the way, but you're just talking about the slow grind of the legal process. That's one thing. Secondly, I won't number them. I'll just give you my thoughts as they pop in my head. Next, I warned everybody that I had never been through a receivership before, but I have been through the processes of the court systems as it relates to reorganization and bankruptcy for companies. And I did warn you pretty strongly that every courthouse is different, every jurisdiction is different. My experience, the main experience I rely on that was very expensive and time consuming, and I too fought for shareholders and fought to get a result, to get investors' money back. But Louisiana is where it was. I think that a lot of their legal system may be more Napoleonic. I don't know. I'm not a lawyer, but it might be different than Nevada. Anyway, what I noticed is everybody gets paid down there. The judge was getting a piece of the action. It started out when we showed up on my dime last minute. I brought 2 attorneys to my memory. You know, the whole airfare and hotels and filings. And we came to court with one of the guys who, I'm not sure his motives were great, but he got sidelined because of a prepackaged, pre-organized bankruptcy filing, all at the last minute, all to circumvent disclosure. And I think it came to me either on a Thursday to my home. It may have been a Friday. And in that span, we got down to New Orleans by Monday in person, and we filed an objection, I think. Again, I'm not an attorney, but I think either Friday by 5 or Sunday, is it possible? But anyway, we went down, we hired a local attorney, we met with the other CEO with his attorney, and we had a big meeting in this hotel in New Orleans. Can't remember the name of it, but the meeting, it was an old bank, and our dinner was in a vault. It's a pretty nice place. Anyway, we showed up, and we're on one side, and on the other side is this battery of lawyers and attorneys and CEOs. Too, it was co-CEO. It was like a dozen high-priced guys across the table and a judge, and we filed the various objections, and of course got stopped everything. And then that began a 3-year process, which I funded until I ran out of money. And then I let my attorney, I asked him, what's best for you? Because he came in representing my investors and my, well, it wasn't me all by myself, but for simplicity, my LLC. There was investors and other principals. But, I spent about 120 grand and I ran out of money. And well, I had to keep spending money, but I didn't. I really knew that I was toward the end of my ability to carry it, and which would mean that I would have to drop out. But also for him to make money, he asked if he could represent the entire, I forget the terminology, the entire investor class, essentially represent the estate, essentially represent, see, now I'm lost in legal terms, essentially represent the entirety of shareholders' claims essentially in bankruptcy and reorganization. So he would be fighting, in that case, the company and the takeover artists and etc. So I learned a lot, is my point. I learned a lot. And what I learned is shareholders get wiped out. Shareholders get wiped out. There's nothing left for equity. There's nothing essentially left for unsecured creditors. So your classes of claims, attorneys get paid off the top. Guaranteed. That comes out of the estate. Whatever they bill gets paid. They go before the judge says, hey, that's reasonable, bang, pay them. So we started out across the table was three principals and probably 5 attorneys on the other, maybe more than that, because it was like 10, it was like a dozen people. But anyway, it's a goodly amount of attorneys on the other side. On my side, we had 2 attorneys. The other CEO had an attorney, and then we hired a local representative. So I guess it was 4 attorneys. So maybe that was all in over the course of the back and forth. It was probably a total of, I don't know, 8 attorneys at the most, court hearing after court hearing. Every month for a while, we were going down to New Orleans. But when it came to settlement, you should have seen the settlement table. I joke, but it's like they took the conference room with a long conference table and they broke out the walls of the next two conference rooms and they brought in those conference tables. When it came to settlement, we were a small company. Our corpus, our estate, as they call it, was not large. But I'll tell you, that feeding trough of attorneys and of the judge, I think, as well, and every other person that you could think of, it must have been 36 people sitting at the table. And I'm probably exaggerating, but it went on and on. The whole room was full. Like, we got to pay all these people? What do shareholders get? I'm telling you guys, when I saw that it was going to receivership, I came out pretty strongly and said there won't be anything for shareholders. I don't understand receivership as compared to prepackaged bankruptcy and then reorganization and then coming out, and then but I went through it. I didn't go through receivership, but I went through it. And we won. We won. And my partner's investors, because of how he designed their investment, they not only got their money back, they also got a very handsome return back. But my investors in it, who would have lost everything if I hadn't fought, they didn't put up any money to help me. I had to, what a nightmare. But they got all their money back, but they didn't get a return. And there were some legal expenses taken, not by me, taken out, because I'm telling you, out of the estate, all these attorneys had to be paid. So anyway, we won, and shareholders were wiped out, absolutely wiped out. My associate, I fought him for about 3 months, and he would yell at me and get angry. He had the CEO, and we were in a first secured position, and he wanted us to go to unsecured because I guess the CEO was asking us to do it. And there was plenty, their argument was there were plenty of assets. And there was another guy in first position, but he wanted us to step aside, but he would end up paying for some of the, I forget how it went. It was so unpleasant. And eventually I acquiesced. So we actually were, instead of in a secured position, we were from the court's position, even though the CEO said we were secured. It was deemed we were unsecured. So I've been through it. And I think the fact that Richard Hoffman took this long to experience it is unfortunate, but I think it's good for you to see what happens. Everybody's feeding at the trough of the trough, I can't pronounce it, of the estate. Everybody. And I wouldn't be surprised if the judge isn't either. But all the attorneys, in this case, the receiver, they're all feeding at it. So there's very little left for unsecured and for secured. My next reaction to it was it doesn't surprise me that the so-called reports were written by the attorneys, not by the receiver. and that the receiver really didn't do all that much work. That doesn't surprise me at all. That was my suspicion at the beginning, that in fairness, Richard fought back against. But now he sees it. I give him great credit for that. I do. It's tough to let facts, as you're going along, change your perception. A lot of people don't do that, but it says a lot about him that he's very clear where he stands now. So that doesn't surprise me at all. I guess it surprised him. He's very careful. He blames the attorney rather than the receiver. My guess is, because I know the receiver, and I've asked him in an unrelated matter some of the same questions that must pop in your head. And the receiver plays what's the word? Ill-informed or unaware, and says, oh no, I know there's shorts, but that's not what's going on. We're just cleaning this up. So you have to take him at his word. But now I'm going to go into, I guess, my last point, unless I wrote something else down, and then I'll read your comments. Oh, before I get to my last point, Richard is focused on 25 grand as substantial, and it is, and money's going elsewhere. It all is. But guys, do you see? There's nothing for you. There's nothing for you. I should quickly point out, 25 grand is de minimis on a per share basis. I should also point out what is it, AI-finity? I would, look, I've never talked to the company. I understand the CEO is a good man, is looking out. He also is looking out for shareholders. Of course, he needs you. When he sees that there's 3,000 people listening to the CEO, he's saying, wow, that shell's valuable because I need shareholders. They all need you. But he already has you. He can go get another shell and talk to you. He already has you, the CEO, Foster or Forrester or whatever. So he doesn't need to buy GTII. He can get a different one and still get you as an audience. And regardless, if that CEO sticks with GTII, they're going to come to you for money. It's not a pretty picture. Shareholders will essentially be wiped out or crammed down. The only way you will benefit is if you add more money. And I've been consistent with that for a long time. The time to look at GTII from a financial standpoint is when they come to you asking for money. And then you can look at the situation then. How many shares out? What's the business plan? What's the pro forma? What's their projection? How much money are they raising? And all, you look at it then. Right now, to buy shares or even to keep shares is just a matter of gambling. And I think naive, in a nice way, naive, but in a more blunt way, it's just ridiculously reckless to buy shares of GTII now. Um, Richard gave you a bunch of names, which I started writing down. I like his idea, Richard's idea, of contacting all those people. I also like Richard's idea. He said he'd do it for free. I like his idea of getting a attorney in Nevada to represent shareholders. But I want to re-emphasize that's a legal proposition, not a financial proposition. You won't get any benefit from it. Nothing. It'll be long. It'll be educational. You might cause Reichman and his daughter pain, maybe. But there are no deep pockets. I mean, I suppose D&O insurance might be a source of some return to shareholders, to the extent that any of the principals still have assets that they haven't absconded with or put offshore or put in their wife's name. Perhaps, but you got to pay all those attorneys, you got to pay the judge and the receivers. And again, I'm not exactly sure in Nevada or in receivership if the judge or those type people get a piece of it, but it wouldn't surprise me. Yeah, I guess I wrote down what is success. I guess I'd wonder what everybody's trying to achieve. If it's justice, if it's um, some sort of avenging angel coming down and righting everything, I don't think you're going to get justice in the court system. You might get, if there was fraud, and it looks like that's what's alleged, and if monies were stolen, and that's looks like what's alleged, it's possible that somebody will go to jail or prison, but I don't think you as an audience, and it might maybe after Railtown, if Railtown works, you might be able to. But I don't think an attorney, other than the initial filings and to try to stab at it to see if there's anything in the corpus, in the estate, I don't think an attorney, let me say it differently. I'm skeptical that an attorney would file a class action suit because there's nothing there, or very little there to go after. And I think if people raised enough, I think it's worth, I like Richard's idea, don't get me wrong, for if people are willing to do it initially. But if it becomes a long-term battle, I don't think I think it's unlikely that anyone will finance that long-term battle, including you. It'll get very expensive. It's hundreds and hundreds of thousands of dollars to prosecute a case. And so I guess before I go to your comments, that would be my final point broadly. And this goes all the way back to Cindy Lou Who being mad at me. And maybe I presented things in a bad way, so I'm not mad at her. But the system, if you want to call that, the sting operation, the criminals. And by that, I mean it's the big hedge funds and the big funds, even retirement funds in the United States. It's our biggest brokerage firms like Goldman Sachs and others. It's the prime brokerage side. It's Congress. It's the regulators. It's the attorneys that represent both the criminals, the regulators, and are probably going to be in court here. It's the market makers who don't really exist anymore. It's the groups like Alpine and the Hurries. It's the offshore monies, which are probably somewhat affiliated with our big pools of money. This whole sting operation is sophisticated, and its only goal on an industrial scale is to steal money from you and from the market caps of every single company. I think in the specific case of GTII, it was always a questionable value proposition, although I thought Reichman was an honest guy from what was presented to me. My source was him, by the way. Almost all of the information I got about GTII was always him. I did meet this other gentleman who I think worked on your behalf. I did meet him, spent quite a bit of time with him, and I learned in those meetings. I met with the Trento guys. I learned in those meetings, but essentially all information came from him. And I think he gave the information he had forthrightly. So I think Ham's weakness, just like on another stock, Logic, the guy who has no love, by the way, for him, the guy who worked on the American Stock Exchange for his entire career, and other people, anybody that believes, as I did briefly for, I guess, about a year and a half of this, anybody who believes that the Wall Street system is the same as it used to be is just not dealing in reality. This has been an ongoing campaign of a handful of men who they were always on the edge, always looking for exceptions, always pushing the envelope. And so some of this kind of cheating went on for a long time. One of the escape valves, I want to say it was Regulation F, but it could have been H or G. But there was a safe harbor for international investors such that they, particularly when there was an IPO or a secondary, they could sell stock prior to it and then deliver that cash into the offering and buy stock. And they did it over and over again, and they could pocket a profit. And that happened on every IPO, every secondary, and it was protected. There is some sort of safe harbor for international money. And that happened in the 90s and I guess in the 80s, but it happened for sure in the 90s. It might have been S. I don't remember the letter on it. But it was a relatively small portion of transactions. But I'm sure it's these same guys organizing it. But they had to expand their criminal enterprise. They had to keep pressing, changing rules, getting courts to establish precedent, getting attorneys and lobbyists and changes with Congress and the President of the United States and make no mistake of it, these banks, they control the Treasury Department and the Fed and these appointees. Rubin I just remembered the other day I couldn't. Rubin under Clinton got some of this move forward. The idea that Wall Street can self-police was probably, it's been there and as an argument since FDR, but and before. But Rubin was successful getting that great spineless third way compromiser, as Christopher Hitchens wrote his book, No One Left to Lie to, Bill Clinton, to codify the idea in many ways, derivatives, some commodities, and in this specific issue, that Wall Street could police itself. It got no better under George W. Bush, and it got worse under Barack Obama. I would say that Donald Trump, in his debates, pointed out to people when they got upset with him, they're always upset with him, but he pointed out that the banks, he said, these are not nice people. They're not good people, he said in one debate about the banksters. But then Trump has as his advisory team a bunch of Wall Street banksters. So it gets confusing. I tend to think Trump wants to fix a corrupt financial system. But then under Biden, I think Biden was oblivious, but I think the women and young men that ran the auto pens just made it better for the banks. And so anyway, for 20 years, they've pushed the boundaries of this criminal operation, and GTII represents it. I will go so far as to say this. Of course, as I'm not an attorney, so I can speculate. I would not be surprised if when the Kramers, Kurt and Seth Kramer, lent face value to my memory, $64,000, was it 68? I think 64,000 face to GTII in a toxic convertible note with the attorneys, father and son, Nadich, father and daughter, Nadich, providing the initial paperwork of a toxic convertible note, which was discounted. So I think the company received, oh gosh, 58,000 or 56,000 off of the face. And then they continued selling stock in just a massive way. They started selling as soon as they were the first phone call. They started selling stock. The guy with the big nose and the white car fetish, you know the guy that ran the boiler room. I can't remember his name. It's the Kramers and their head lieutenant. They started selling, and apparently they had 6 to 8 guys as their main funders from Long Island. Leo was one of them. That might have been the father of the Kramers, but they had some backing. I wouldn't be surprised if Reichman were in on it from the start, because GTII had I think it was called Green Tree or something, or it had a different name. I don't think that was it. But someone had destroyed the market cap of that company previously. So there was a large position of whatever you want to call it, phantom shares outstanding on that stock. So I wouldn't put it against it that Reichman always knew what was going on. On the other hand, maybe he didn't. But the selling started right away, and it's never stopped. I think my opinion, Ham was fighting it, fighting the criminals. And I think this gentleman who was interceding for you was fighting the criminals all the way. I mean, it was the Picasso, and I think the whales, the initial whales were fighting it. It was the Dogecoin and the coin named after a dog. It was another Picasso. It was buying some smaller company. It was buying, I guess, bringing in an educational software company. It was potentially Trento. It was doing the stock dividend. It was doing the I'm forgetting everything. The law firm, and I'm sure I'm missing some others. But I think they were trying to fight the shorts all along. But I think our experience shows us now that the sting operation, the system, is very powerful. Apparently, if the narrative is correct, the Kramers got in trouble with their position, so Alpine took over the entire position. John Hurry and his large wife, and maybe he's got a girlfriend, and they're interlocking, cheating. All of this is in my opinion, but a lot of that went offshore. But they hired law firms that filed in New York, in Florida, and then with preposterous claims. In my judgment, I don't want to go through them. And then as they were about to lose, they moved it to DC. All of it bought time. But then Reichman brings in a guy, Rhubarb or something, from Chicago as his savior, I guess. I forget what the position originally was, CFO or COO. But he came in with a derivatives background. That guy, and I said it from the start, that made no sense to me. Why would that guy come to GTII, a shell company, with his supposedly prestigious background? I think it totally was to manage the risk of the large phantom position. He's in derivatives. And then he of course, came in and he negotiated a deal for himself. So he'd make 20 million before you made, you might make something. And then they hired attorneys. And I think this guy who has represented the whales and represented shareholders trying to catch out the shorts, I think his judgment is wacko. Because I think, it doesn't mean he's in on it, by the way. I just think he's been fooled. Attorneys came out of Nevada, and my understanding is the attorneys brought the receiver. How do you know those attorneys, and maybe by extension the receiver, aren't part of the whole sting operation, and their job is just to clean up the risk? Just kill the risk. It's like all those westerns you see where the killer, it's like The Quick and the Dead with Sharon Stone, or there's a couple recently that I saw. None of them are popping in my head per se. More modern, where the killer kills a bunch of people, including the father, and leaves the son. And eventually the son grows up. He's no risk now, no risk at all. So he leaves him. There's one with Nicolas Cage, and Nicolas Cage leaves the son, and the son comes up and goes after him. But that's like these phantom shares. You can leave them, but they could come back and bite the criminals. It's the only thing. It's the kind of sloppy loose end. So who's to say, just like they bring in the derivatives guy, who's to say, you know, this gentleman assured me when I asked him that the receiver's a good guy. You can trust him. He's on our side. And oh yeah, the attorneys, I guess out of Nevada. And I think there was a misunderstanding, possibly anyway. I think Richard once thought I was talking about him. I wasn't. I was talking about this Nevada group. I don't even know their name. I guess I do now. Marcus Orbach, and who I believe I've had interaction with, by the way, with another company, not these two attorneys. And there was another one too. I don't know if I wrote it down. Douglas Cercioni or something. Anyway, I gave up on writing it all down. Who's to say that the attorneys and the receiver weren't brought in by the criminals? Guys, I don't trust anybody in it. I'm not saying anything bad about the guy who I think worked hard on your behalf and now might be behind the fight of all of this on behalf of the whales and everything. I'm not saying anything negative. I just think he might be fooled. Attorneys can be very clever liars. And I'm not saying that about Richard. I'm talking, and I don't know these attorneys or the attorney representing the receiver. So I can't say anything specific. But in general, the criminals own the attorneys. They own them. That's where they get paid. That's where the money flows. This whole system, this whole idea that you can invest in one of these stocks and make money, guys, they always win. They always win at the end because you don't know when to sell. And I'm not picking on you. I really am not picking on you. I don't know when to sell, obviously. I guess I was just going to try to draw you what I'm talking about, but I guess I'll just say it. To make these things work, they need the promoters. Oh, you're blaming a dead man. No, I'm not. I'm just saying they need that because that's what brings in retail. Because the machines won't believe they're in trouble unless you all come in. Also, the stocks don't go up. There's no volume there. So there's nothing for Kurt Kramer to create a document on so his clients can start selling the stock so then they can give the company their own money, and it's all in a toxic formula. They never risk their own money. They're always going to win. And I've told you the schemes. And you see it over and over again. And there's these brief run-ups, but stock after stock after stock after stock after stock. It's just a straight, like the one that Mark brought the other day. What was it? And I know I overreacted. BioXL, BTAI. It's $5 now, and he thinks it's going to go to 10 or 12. But according to the chart, if my eyesight didn't mislead me, that stock was $1,600,000 a share, and they just crushed it for 4 years. And now it's got a dead cat bounce because they want one more gasp at it to pay each other as they finally put it to bed. Now this stock might be the one that is an exception, but it's so much work to screen through 99 stocks to find the one exception. The best strategy is just stop listening. It's the best strategy. Anyway, let me go to your points, and I doubt because I haven't really been a active participant in GTII, that I doubt that anything I've said is really interesting to you. Those were just my thoughts on Richard's video from whenever, this weekend. I do commend him for volunteering his time to look out for you, look out for shareholders. Oh, that was the other thing I wanted to point out. He is talking about shareholders, and he's exactly right. What I think the attorneys in this whole scheme, I'm not talking necessarily about GTII, but just 20-year scheme. They've been pushing this for 20 years. They got Bill Clinton to make it legal for the system to give you entitlements instead of stock. They under Obama, the brokerage firms, and it started under Bush, but it was really Obama. He split the brokerage firms into two and gave FDIC insurance to Goldman Sachs, of all people. So all the risk went out to the prime broker side, and all of the risk arb and compliance and all of that went to the hedge funds. So oddly, that used to be in-house, and maybe some of it still is, but the hedge funds started dealing with the prime broker, and that source of revenue, which was mostly the stock loan desks, is still accruing in the case of Goldman Sachs to Goldman Sachs, but the concentration of wealth is the hedge fund rather than the in-house trading desk or investment banking or whatever aspect. So then the rules that changed, they got rid of the uptick rule. They have abused completely the know your customer rule. They've abused the disclosure of who's investing, who's providing the money rule. They changed, they got Ann Wagner to go along with the idiotic argument that they're protecting your privacy when in fact she's protecting the criminal's privacy. There's no audited, consolidated audited trail of transactions. They have these dark pools they have offshore. In Europe, they can do trade. They don't even keep records of the trades. And they're able out of Europe to establish a la MMTLP, they can just create trading in the United States. No one enforces it. The SEC is entirely corrupted. Gibson Dunn represents the Kramers, but it also represents the SEC. It's all corrupt. All corrupt. They, for some reason, allow high-frequency trading in stocks, over-the-counter, NASDAQ, in stocks which otherwise would trade by appointment. It's just a steal. They allow CEOs and these so-called financial firms to enter into agreements, toxic convertible notes, that I think break usury laws, but they allow it. There is no enforcement. They allow spoofing and colluding and cheating on the side of the shorting. But if you're long, they go after you. So the SEC is set up to make it all the advantages on the side of the stealers. And then the SEC requires full disclosure from CEOs, but no disclosure from the Kramers or anyone else. And you get into the legal system, which is overwhelmed with DEI and promoting people that don't have experience now. Once, with time, that'll change. But they don't have any experience, so they don't understand what's going on. They got to see it, like Richard Hoffman had to see it before he could accept my assertions, which, in fairness to him, I couldn't prove. I could not prove it in a court of law. But it is that old joke. Who are you going to believe? You or me or your lying eyes? And it's the evidence is there in the stock price and in the pattern over and over and over and over and over and over again. And that's why I've been so adamant, to the point of being an asshole, that you shouldn't have any of your money right now anyway that's in the junk stocks, in the high risk stocks, speculative area. You shouldn't have any of that money in any of these other names. The only one you should be in is Railtown. I'll go through your comments, and we can talk about Railtown a bit, but it's 9 o'clock. Let me get a cup of coffee. All right, I'm going to go with the last one first. Sheila D, bravo. I'm not picking on Richard. That's something he was probably correct on from a technical point of view. He said you can't trade GTI in the United States, but it's not a fact. A lot of you were able to get trades off. It may be that the system, the criminals, the sting operation just wants to buy some of the shares back to get out of some risk. Personally, I would take them up on it. You want to buy my stock at 15 cents, 13 cents, 10 cents? I tried. They won't let me sell at Morgan Stanley. But I would take it and put it in Railtown. I don't think there's a chance in hell that GTII will ever squeeze. They never will let it squeeze. And to the extent that Cindy Lou is correct that I blamed a dead man, that's not what my intention was. I was trying to call out what happened, but I get so frustrated because I feel like a lone voice, and there's no support for my position. There's just always criticism, and it shows up in my frustration. But if it hadn't been that methodology, the criminals would have come up with something else to halt the squeeze. And maybe that's what we're seeing. Maybe that's the whole receivership process is what we're seeing. But I'm so glad, Sheila, that you sold all your GTII. I'm going to go back eastward. Canada is renowned for the depth of its AI ecosystem, which includes 1,500 Canadian companies developing AI solutions and 10% of the world's top 10 AI researchers ranking globally. Let's go through that. So it's 1,500 companies, and AI Partnerships has 165 of them approximately. And in their own statements, they would argue they have the best 165. So, interesting, Thibault, if you took the 10% of that number, it's possible they organized the best ones. 10% of the world's top tier AI researchers, yes. Canada has made an emphasis on AI, partly because they want to diversify from energy and resources. But they also have set up two research, AMI, A-M-I-I, and MILA, I forget what it is, Montreal Institute for Learning AI or something. But they've set up at least these two you're exactly right, for research and financing, non-dilutive financing, and for expertise in the AI space. I think Railtown, you're going to be shocked, I think, Thibault, of how big the story will be in Railtown. And that's one of the reasons I get so darn protective, I guess, but so my frustration boils over when anybody suggests to you as investors that you should somehow diversify out of Railtown. I think it's the other way around. You've got to concentrate into Railtown, at least for now. Thibault sold in Canada. That might be the difference. Maybe people are selling in Canada and instead of Rich Gowdy, do you and Ham still talk? No, we don't. That was his decision. And Rich, I'm particularly, well, it is my mother's side. I have Italian blood, and I watched in my mother's family people just, and my mother's behavior over time, just the ability just to dismiss people and never speak again. And Ham is Italian, and maybe that's what happened. I don't know. You'd have to ask him. But he decided to stop speaking to me. So I'm not going to comment on it because it wasn't my decision. I think it may have had to do with a sharp divergence in views on Finger. But my experience with him in the past, he didn't mind opposing point of views. I don't know. You'd have to ask him, Thibault. Good. I mean, not Thibault, Rich. Hey, Thibault. B-Zone, still talking about Lou, are you? Weren't you wrong on about 10 stocks yourself and led all of us wrongly thus far? No, I don't think that's true. I think I was wrong on Logic, but I'm not sure I was wrong on Logic if Logic did what they announced, and if you all hadn't captured the board and the attorneys, and if Aubrey Advisors and Chadron Financial had not, in my judgment, committed fraud from the jump. Of course, they have attorneys to cover that all up, but I think Polar was the large investor there. So I believe Polar, and I think there was one other investor, was the investor behind Aubrey Advisors and Chadron Financial. I think they stole my judgment, 150 million out of the market. And I had no clue that Brent's son, I don't think he was involved in the decision on Aubrey Advisors. And then Peter Boards and a bunch of close advisors. But I fought it. I wrote emails. I got upset right live when I saw the deal. I said, you got to get out of the, I'm just one person. And the system is extremely powerful because most people on the boards of these companies, most CEOs probably got by on life by conforming and outperforming others in following the rules and following advice. So when attorneys come in and say, and that's the point I wanted to make, by the way, about Richard, he's talking about shareholders. I think what attorneys have done over time, over the last 20 years, is they've gotten boards and CEOs to focus on the company instead of the shareholders. And CEOs' responsibility is to shareholders, like Richard says, instead of strictly to the company. But the argument has become, well, if we look out for the company, we're looking out for the shareholders. That's not an ipso facto at all. At all. It's just not. It's just not. But anyway, B. Zane, I don't. You're wrong about 10 companies. I think the only one that I would take as wrong would be Logic. And if you want to extend it, because it broke out to collective audience as well, I think I was completely wrong on that one. And I paid for it myself. But GTII was not my recommendation. That was Ham. Finger, frankly, was not my recommendation, but that was Ham. However, and CRTD was Ham. But however, in all three of those cases, I did provide a platform for the support of that. I did also put out charts early on of where, if they were to squeeze, what I thought could happen. And I did think in the case of both Finger and GTII that because of Ham's hard work, because of this other gentleman, because of the hard work at Finger, that there were squeezes going on. And I did believe that systems in place would buy in shares. I just didn't know how pervasive your corruption is, B. Zane. But no, I don't. You're just wrong. I haven't recommended 10 stocks at all. But thank you for guessing, because I'm sure you're out there crushing 1,000 stocks a year. So, but thank you for guessing. I think it's on you, the killing of the stocks, not me. I've been very strong for about, I would say, at least a year and a half, maybe longer. We got to stay away from all this crap. But I did recommend or talk about Nixie last year, and I think some people made money on Nixie, but I backed off on Nixie, sort of November, December range. And then I started thinking that could work again, and then I backed off of it, and I've made those positions clear. I have said at certain times that I thought there was a trade in Finger Motion, for example, and with all respect, I think I called those trades really well. And I think people made money on them if they listened to me. So I think you're completely wrong, B. Zane. And just because you say it doesn't make it true. I'll come back to the bottom. There's not many comments. Hey, Ronnie. Good morning. Hey, Ronnie Atkins. Brian says, oh, yeah, been around lawyers a lot. Yes, that's my point. They just think differently. It's a different processing of information. I'm not saying it's bad, it's just different. And it causes a lot of frustration because to a guy like me, who, and not any longer, but when you're in the middle of an active Wall Street situation, you got to make your decisions sometimes anyway, quickly. So you're processing a lot of information very quickly that may or may not have been entered into evidence, may or not have a white piece of paper, may not have an email backing it up and a judge's hammer. And you don't have all that. You just got to act, and you've got to act hopefully correct, by the only measuring stick on Wall Street, whether you make or lose money. It's a different game. Hey, Gary. Hey, Rich. Yeah, it has. Thank you for coming on there. Steve, so dividends are worthless. I sold. Yeah, in GTII, I think they're going to be worthless. I think that the GTI, I mean, basically, if Reichman shares are not retired, I mean, let's just look it up right now. I don't know what's going to happen, but let's just look it up right now. I guess Yahoo. I don't know. Yahoo doesn't always have accurate information, but other times it does. So I don't know. But let's just go with, GTII is trading for $34 million. Guys, if you can get out, well, that's just irrational. Let me see how many shares are outstanding. 396 million implied shares outstanding. That's Yahoo. Let's go to OTC markets. Problem is, I'm not going to take the time to look at the last receiver's report, which, surprises of surprises, is written by the attorney out of Nevada who may be hired by the criminals. You guys just don't know. You guys just don't know. Nobody knows. And I think it's foolish all right, so OTC markets says 340 million shares. Those are the number of shares of GTII outstanding. I don't know how many the receivers getting reduced. The goal, I think, was to get it down to 100 million, and then the receiver was going to get 18 million or something like that, for the risk. I don't know. I don't know how much Reichman and his daughter have. But I mean, if there's 200 million shares after the receivership of GTII, and assuming Reichman keeps his shares, I don't know what's a good number to guess. GTII is a shell. And the AI versity comes in with a financial app, with a subscription model. I mean, that's not a crowded market. But I don't know. I can name several applications that maybe are out there that compete, but I don't know. I don't know. But if Aversity has value, they're going to come into the shell and they're going to at least ask for 85% of NewCo, probably more like 90 or 95%, because there's other shells out there they can go into. And current shareholders will have 15% of the NewCo. So if you do a reverse on that, 200 million I mean, one way to look at it is there'll be there'll be 1.333 billion shares outstanding. They'll probably reverse it and all, but so Steve, whatever percentage your dividends, if I use mine, I have 11,000 shares as a dividend divided by, let's say it's 200 million. So I have point 0.000055 currently of GTII. By the time they bring in Aversity, I will have point 0.0000 1, 2, 3, 4, 5, 8, 3. So my dividends right now are worth, if I move the decimal, well, anyway, it's so small. My dividends right now, 0.000055. So let me do it a different way. Of the market cap right now, 35 million, which is a preposterous number, times 0.000055, my dividends are worth $2,000, maybe. Well, assuming Aversity comes in and nothing changes except the number of shares, and let's say the market cap stays where it is initially, now you could argue that Aversity is so big that it's going to create huge market cap increases. All right, so that's 1, 2, 3, 4, 5. 1, 2, yeah. 8, 3. It'll take my shares to $290. And that's based off of a print here that's probably completely wrong. Now, what happens to the whales? What happens to when you add in the receiver? What happens when you add in new capitalization. The receiver's gonna, he's got some sort of deal that allows him to keep a huge percentage of the company. I don't want to risk misstating the formula, but it's big. So my ownership will be reduced by that. And then the whales have to get paid if they can. If they can't get cash, it'll be possibly some sort of secured note with a conversion, or they'll just clean it up and convert to stock. And that could be big. And then the company, because the only reason AIversity, even if they have revenues, is going to go into a public shell is to raise money. They'll probably come to you. They might go to the whales. If they're stupid, I don't think he is. He'll go to, Jeff Easton or somebody like that. But they're going to raise money, so then that's going to be crammed down. Yes, Steve, I think the dividends are worthless. Hey, Eddie, Fast Eddie, morning. Yeah, I'm probably not going to go much longer here. Unless the topic turns to Railtown, I'm probably not going to go much longer. I just wanted to comment on the GTII. Hey, Raw Dog. Raw Dog says, I made money on Nixie, sold it all to buy Railtown. All right. I made a decision about my money. Nobody twisted my arm. So, bravo, bravo. We can talk about Railtown if you want me to do that. Obviously, I'm not striking a chord with GTII. But I guess the main thing I wanted to say after watching Richard, I was impressed that he's coming out so strongly on the side of shareholders. And I wasn't sure. I thought he was in on something with the receiver when he got mad at me when I made my questions early on. But I give Richard credit. It took him a while to see it because he needed evidence. Fair enough. But now that he's seen the evidence, I give him credit for calling it out. I don't know what's going on. I don't know if it is intentional or just stupidity. It's the same you can say about anybody. Or unawareness. It doesn't have to be stupidity. It can just be unawareness. Or maybe, as Richard seems to imply, it might be the attorneys working with the receiver, which goes back to my point, which the whales and maybe this one gentleman might be fooled. Those attorneys, which are part of the court system, may have been through this before. They know where the money flows, and they know that if you work with the Hurries and you work with the Kramers and you work with the prime brokers and you work with the big funds on Wall Street and you kind of take your guidance from Gibson Dunn, that's where you're going to get paid for the rest of your career. David's asking me why comment on GTI when in the past you get all pissed off when someone asks a question. Richard has always been on the side of shareholders. Yeah, it looks like he has been, David. But early on, I've always been on the side of shareholders. And early on, when I questioned why was the receiver receiving so much compensation, I don't know if you remember, Richard was vociferous in his defense of the receiver. And it got a little testy. And so maybe that's what you remember. And it caused me to just not trust the situation. But I want to make it clear after I listened to Richard this morning. I agree with you. I think Richard is on the side of shareholders. But David, I'm also trying to make the point that my I don't know the word. My field, that's the wrong word. My understanding is from a financial side. His is from a legal side. And it's just different, is all I'm saying. So why comment? Well, Richard David came into this audience and into Ham's audience originally, and it wasn't the other way around. And so maybe anything related to GTII is in Richard's sole purview, but I don't think that's right. I think it's something that I have a right to comment on, and my comments this morning are in support of what I heard Richard say today. He said it, I guess, I don't know, yesterday or Friday, but I'm actually coming out and correcting apparently my misinterpretation. When he got upset with me, I misinterpreted that as possibly he was blinded by what was going on. He's not blinded. I think he is working to help shareholders. But David, it's different. And I don't change my view on that. There's going to be very small recovery for shareholders via the legal system unless there's fraud and unless they can locate assets or insurance to claim. Or if they can go after the brokerage firms and the banks. But that's a long process and it'll be expensive. So I don't think there'll be much recovery for shareholders via the legal system. Financially, I don't see it. I don't think GTII is a financial trade. I don't think a financial trade in GTII right now is viable at all. So that's how I call it. And that's what my comment is. And I'm sorry I've upset you, David, but I don't mean any harm with my comments. Hi, John. How are you? I don't know if there's any new information I have on Railtown, but I'll be traveling tomorrow. And for those of you who, I think we're probably at 11,350,000 now, that might round us up. It might be enough to round us up to 8.2%. I'll try to update that before I leave. But I'll be traveling tomorrow, and I may or may not be able to do any live. I do think, as it relates to Railtown, my call has been that Railtown will be September. Not because I know anything, but just to calm everybody down. And if we can just accept it'll be after Labor Day, then we don't get shaken out. But you know what? Tomorrow is the 18th. And if something doesn't happen tomorrow, which is probably likely, on any given day, nothing's going to happen. And let's say nothing happens Monday, Tuesday, Wednesday, that's pretty much this week gone. So then it's the following week, and it gets very close to September. So I'm not sure I was wrong on that. On the other hand, when I spoke with the company early last week, he didn't give me any time frame, but I can probably check my notes and make a couple of comments about Railtown that are not. I don't think he gave me any material information at all. I tried, but he wouldn't budge. But at the same time, I don't want to repeat it verbatim either. He did say to me he wants to give me a sense of confidence about what's going on at AIP, Railtown and AIP. I don't know how to interpret that. I think it says that the transaction is moving forward, which is evidenced by their last press release. There's a lot. I want to keep the conversation private. I mean, he talked a little bit, which we know, that AI partnerships met with Railtown or vice versa at that AI in British Columbia conference. We know that because they announced that they joined the partnership shortly thereafter. We talked a little bit about OMERS and Dr. Tom Core and John Ruffalo, how they backed Constellation Software, which is now a $100 billion vertical, aggregator of software companies. And each one of those companies runs autonomously, but the revenues filter up to Constellation Software. What I think was being implied is that AIP Partnerships was founded to follow that model with the AI companies, particularly in North America and particularly in Canada. So as we know from the press releases, AI partner and from their website, AI Partnerships wanted to put together the best of the best of the AI companies. And that's what they did, I think, with 155 or so, 160 AI companies. I don't think this is anything that can't be said, but when they engaged Canaccord in February, well, I don't know when, but in February, Canaccord specifically was selected to handle this. It's in the press release. This acquisition of AI partnerships by Railtown. His point was they had to make that announcement once that became a real relationship. They had to make that announcement, which is what I've pointed out to you. They have to telegraph what they're doing while the shorts try to destroy it. He did emphasize that the structure at Railtown is such that the founders and the management, I guess, they are all aligned. They all own the exact same shares we own. They don't have huge salaries. They don't have huge awards. So when decisions are made, what's in their self-interest will also be in the interest of shareholders, us. I don't feel comfortable saying that, but it's a very positive thing. Yeah. I guess that's about it. But from a different gentleman, I was corrected that September is too far away because the company very literally probably is running up on some deadlines in terms of disclosure. I think that's an opinion, not necessarily a fact. So my point is, I might be traveling tomorrow. I might be traveling for several days. It's always possible something good will happen with Railtown, and I won't be available to say something. I'll try to be. I couldn't sell them, just a group of no tickers. My dividends are much smaller. Let me see if John, let me see if I have that. I made a chart for John, and I might have deleted it. But if it's, yeah, here it is. Here's the gold silver ratio. Let me take his comment down. Let me take his comment down. So this is the gold silver ratio. This is Mike Maloney's ratio. I hate looking at it, John, because I haven't been able to rebuild my silver position. But I'll look at it since you're asking. I can't bury my head in the sand. Gold right now is $3,035. Sorry, $3,335 an ounce. I think silver is $40. Makes me sick to my stomach. Because I'm glad for everybody that bought, but I'm not thrilled that I haven't been able to do so myself. Yep, silver's $40. It's doubled. Silver has doubled since I've wanted to invest in it. $38 to be specific. So 1 ounce of gold gives you 87 ounces of, well, 88 ounces of silver. So, but over 80, right now you should be 100, by this chart, when the ratio is over 80, in other words, when a certain amount of money can buy 1 ounce of gold, or in current pricing, 88 ounces of silver, according to Mike Maloney's strategy, you should be buying 100% silver. And if that, which it looks like it is going to fall down into that range of between 70 and 80, you would balance it 25% gold, 75% silver. Of course, nothing is fully rigid in this rule. But, I've been wanting to buy silver since it was $16, and I just haven't had the money to do so. And I've been telling you about it. Right now, of course, I'm only been telling you about Railtown because I don't want to distract you from a concentration on Railtown. But silver remains the single best investment out there, in my judgment. It's the only asset which hasn't been inflated to all-time highs. In fact, again, I'm doing it by memory, but roughly $52 an ounce was the high of silver in 1982, I think, 81, 80, when the Hunt brothers situation happened. And I'm not sure it was caused by the Hunts, but that's how history has it. But that was $52 without adjusting for inflation. Silver's never been above that. So I think silver, unfortunately, right now, silver has more than doubled from, it requires, a lot more money to buy it now. But that doesn't mean it shouldn't be bought, because the dollar is in all likelihood going to dissipate over the next years in value. And somebody I was talking to yesterday, I've told you all already, but she said, do you know how much silver is required in a cruise? I forget. She didn't say cruise missile. She named it a Tomahawk, I think, missile. I said, yeah, I know. A monster box, 500 ounces. So silver's going to go up just from demand as well. So, but I haven't been talking about silver. I didn't expect Railtown to take 3 months. I actually thought, it was my own idea, but I actually thought that June was when the transaction would be most likely completed. And then when that didn't happen, I guess my bias was it would be July. And when that didn't happen, I thought it'd happen in August, although I started saying because of the vacations that we should wait until September in our brain, so we don't get all anxious. And now we only have 2 weeks left of August, so we'll have to see. When the merger is completed, how soon will the revenue projection start to have an impact on the price? I think immediately. And then your question's going to be, what do you mean by immediately? They've already announced either 4 or 5 revenue deals, but they haven't said what the revenue is. So I would expect updates on that. The company probably already has revenue in 2025, but we don't know for sure. But they haven't made any updates because it's the quiet period. I would expect updates on revenue. Maybe it's just those 4 or 5 announcements, but maybe there's some other revenue involved in Conductor as well. They've talked about the commercialization of their products, so I'd expect an update on that as well, whatever filings they have to make. And then thirdly, in the press release of February 11th, Dr. Tom Core says that after the merger, he calls it acquisition, I think, is completed, he looks forward to the commencement or initiation of an aggressive acquisition strategy of the 165 or so companies in the network. My understanding is that network is around 400 million in revenue. I would imagine that, and this is a guess on my part, but I would imagine they've already been in discussions with at least 1 or 2 or 3 dozen of those companies to acquire them. Why do I say that? Because they've got to come out of the gate. If they only acquire one company, what happened to Logic could happen to here. And I don't think these are seasoned financial guys, and I don't think they're going to do it that way at all. I think they will come out of the gate with several companies already, if not acquired, the deal is agreed, and then it'll be announced. So I think there'll be revenue from, we'll get pictures of revenue from the, what are those called? Sales agreements. Anyway, they've announced 4 or 5 already revenue deals without the revenue. I think we'll get clarity on those, and maybe some others. Who knows? Maybe they have some other deals that are pending. I think we'll get clarity on how much revenue has already occurred this year. Even if it's small, it could give us color on what's coming. And then finally, I think we'll get a projection or a picture on how many of the companies in the AI partnerships are being rolled up and what is the size of the revenue there. And I suppose if research reports come out and if the company cares to make any extrapolation, we might find out about the size of the addressable market, how much they're going after, the receptiveness of the market to their product. We might find all that. So I think you'll find out right away. Is it the first day? I don't know about that, Raw Dog. It could take, particularly if Canaccord's going to do a financing, which I have no idea, but it would make sense. It could take 2 or 3, 4 weeks even before research comes out, particularly from Canaccord. But that doesn't mean the stock won't go up in the meantime, and it doesn't mean that big funds or small funds, for that matter, won't have enough information in the news releases and perhaps earnings, quarterly releases. They won't have enough to extrapolate and buy the stock. You may have said this, but the 10x projection, was it based on Rails revenue only? I did it. That's technically, it's hard to separate it, but I did it only on Railtown's revenue. And I really did it. I'll show it to you in a second. But I really did it based on this research, which is a year old, and two videos that Corey and Marwan made from a year ago. And I came up with, let me find it if it's still here. Yeah, here. I came up with these revenue projections. The top one here is simply from this research report of a year ago, which had a targeted market of 3 billion. And I used, as they did, a 3% penetration. And that's just Railtown all by itself. That's Conductor. I used 25, that blue column is 25x times revenues. So that gave a target of $13, which I don't see why that wouldn't be right away. I really don't see why it wouldn't be right away. That the company would be, if they can get 90 million in visible annual recurring revenue, there's no reason why the stock shouldn't trade at 13 right away based on 25x. However, all the way over on the right, I discounted that number by 90%. I took 90% off that target, and I came up with $1.32 as today's price at 25x. At 25x. If you want to use 50x or 100x, it's just much bigger numbers. And currently, that's the kind of number that is being used. Just to go back and show you, this study, which I paid for, is 50 pounds, I think. 90 over, just slightly over 90 artificial intelligence merger and acquisition deals, 2018 through 2024. The highest multiple for revenue paid was 55%. The lowest was 12%. And the average was 25, not percent, X. So the highest one, or more than one, was 55x. The lowest was 12x, and the average was 25x. So when we come back here, and we know that the market is now paying 100x and 150x, at least that's the indications, to move to assume 25x seems fairly reasonable. And that's where I came up with that number. Now, taking 90% of it, I get a much lower number, 132. Now, if you come down this, Raw Dog, the 21 billion market, what came from one of the videos as the software developers market, the 300 billion from one of both videos, one was 300 billion, one was 309 billion, is the spend, the anticipated spend on software improvement, AI improvement by corporations. Then you come down to the 17 billion right here. That came off the website for Railtown. I might have that here to show you. I don't know if I do. No, I guess not. But anyway, you can find it on the website. So the 17.2 is I think it was called the software developers market on the website. And then the 130, but that would be by the end of the decade. And then the 132 billion was by the end of the decade for the AI software as a service market. And I ran those calculations too. The one that is the lowest out of all of those is $75 a share at 25x. And I took 10% of that. I discounted it by 90% over here in the yellow. And so that's where I get my 10x from. I think a 3 billion addressable market is way too small. And I think this analyst, if he had a chance to change his numbers, he would probably add a zero to that, is my guess. But I will find out if he does another report. But then these other outside numbers, the smallest one is from Railtown's website, 17 billion. If they can get 3% of that, it would be projectable revenues of 500 million a year. If you pay 25 times that, it works out to with 170 million shares outstanding instead of 139 million. It works out to $75 a share. And then just to discount it for unknowables and time and anything, I took 90% off of that, and that gives me an opening price, if we can use that word, an IPO price, out of the gate price of $7.50, and it's entirely based on Railtown. It's entirely based on Railtown. Has nothing to do with AI partnerships revenue at all. However, if Railtown is going to get 3% of that, and let me see if I can find it quickly. It's so long ago that I made a copy of it. It's taking me a while to find it. It's on the website. Okay, is it here? No. No. Is it there? Ah, here. There it is. Of course, is that only one? Well, let's see what happens. It might be only one of the markets. No, maybe not. So, Raw Dog, this is from their presentation, and this is from their website. So, Railtown is targeting two large and growing global markets. Our platform, that's Conductor. So, anyway, by 2000 and by the end of the decade, they're expecting the global developer tools market to be 17 billion. And that's the number I used at a 3% penetration. But then they're seeing the global AI as a service market grow to 132 billion. And that's that bigger number. So here, the 117 billion comes from the first number. And at 25x, that's a huge per share target. I wouldn't expect that to happen right away, of course. So I discounted it. I took 90% off. And I think another way of looking at it is, what if they came out with only 50 million in annualized revenue and you put a 25% multiple on it? Your target would be $7.50. And that's where my 10x comes from. Billy Cuppa, you have any updates on MMTLP? When will this market be forced to cover too much corruption? People here have been kind enough to put some MMTLP updates up in general. I think some things are coming to a head, but Billy, just to be clear, I don't expect that the system will cover the shares in MMTLP. Apparently, I think it was Donna, I'm not sure, but apparently you can contact the transfer agent and sell your NextBridge shares, I don't know if it's MMTLP. They were saying at $50. It doesn't make sense to me, but it might be worth looking it up. She's a truthful, I don't know. I don't want to blame her. It's somebody else. I don't see any reason why they'd be misrepresenting it. But I do not expect Congress will force a settlement. I don't expect the legal system to do it quickly. And I don't think the security system is going to do it, or the regulators. On the other hand, the one unknowable is fraud. If Fidelity committed fraud, if TradeStation committed securities fraud, it opens the door for gigantic numbers, gigantic. But how quickly, I don't know. How much the lawyers will take a big part of it. Yeah, John, you were right. I think, John, to my memory, platinum is the best performing metal this year. I'm trying to remember where silver was, and I can't. But platinum, like you're pointing out, is up over 30% this year. I think platinum is the single best performing precious metal since the beginning of the year. And I think you were correct 100%. Apparently, there's China buying of platinum is apparently one of the reasons for it. Steve, personal checks cleared same day. Check from my associate in Schwab. Yeah, it's amazing. Hey, Rondell. Hey, Billy. Yeah, I hope it's this year, but I don't know if I'd even be welcome on those space calls anymore with talking about MNTLP because I've been gone so long, but there might be things going on, Billy. And it might be worth checking to see if there really is a buyer of shares. If my gut reaction is if there is a buyer and they're willing to pay a relatively large number, whatever they're paying is probably cheaper than what they think they might have to pay in a settlement. So you just got to call money now versus the risk of money later, and the risk of whether or not a settlement will fall through or actually happen. But I'm not optimistic there'll be any payout as it relates to MMTLP. I think the best chance of getting some sort of return is in NextBridge. But I think it'll take 3 to 5 years. I see an enormous cycle ahead for oil and gas. But first, I think maybe next year, oil could go down to $35 for a while. But then I see it going to $500 a barrel. So, all right, it's 10:16. I think I might leave it there. Let's see if there's any news. Yeah, all right. I think I'll leave it at that. So just to summarize on GTII, thank you for listening to my thoughts. I just thought it was great that Richard came out, I think very clearly and after a lot of hard work and a lot of thought and concern and care. I think he's come out with a request that people contact, I guess, Chad Clement and is it Marcus Abad? I can't read my writing, and Dylan Circolini. Anyway, that it's on his video that you guys contact him and in your own words speak your frustration. I think Richard's offer to contribute his time and brains, judgment to, if some people put some money together to find an attorney to represent shareholders, is fantastic. And I think that his emphasis on shareholders is correct as well, rather than the company or the receiver or other parties. And of course, he's talking about how they're giving money to Reichman to basically pay Reichman's fight against us. This happens all the time. You're supposed to get releases. You don't give money until you get what you want in negotiation. I mean, it's so basic. Why would you pay your opponent money so he could fight you? It doesn't make sense unless you're on the side of the shorts. And I think Richard's, he doesn't come out and say that, but I think he's starting to see that that's a possibility. So I thought it was very courageous and supportive, fair-minded video, and I think people should support him in his ask. And of course, I'm not putting words in his mouth. He is very good at making it clear that there's a lot of this you don't know. When it's my opinion, I'm not saying his words, I'm saying my own. So anyway, I'm glad to know that Richard is so supportive of shareholders. So anyway, thank you everybody, and I wish you peace on this Sunday. Cheers.